Good morning, everyone. This is Doug Campbell with Right Way Options with the Hump Day market prep video for December 24th, 2018. So, the bulls just keep on being bullish, and they're pushing. The diamonds itself had finished just a tiny little bit lower, but everything else, the Qs, strongly higher. The IWM, new record highs. The SPY, new record highs. So even though the diamonds just kind of had a little bit of two-sided choppy price action, it was resting there yesterday. There's nothing here in these charts that show any bearishness. Now, one of the things I wanted to talk real quickly about today is this term overbought. You know, I'm hearing that term tossed around everywhere anymore. You know, from analysts to stock gurus and everyone out there. Oh, it's overbought. Everything is overbought. Everything is overbought. And I can tell you that when I was, coming up as a trader, I would listen to all of that stuff, and it would bias my opinion when I looked at a chart. You simply look at that chart, and what do you see? It's impossible to see anything other than bullishness here. Is the market stretched? Yes, I absolutely agree the market is stretched out. Does the market need a pullback or a rest? I absolutely agree. Yes, it does. But trust me on this, that doesn't mean it has to happen. And just because a rally like this has never happened before in history doesn't mean it has to stop at any time. So please, what would do me a favor and try to avoid all that noise. And here's the thing: I would hear a word like that, and it would make me do stupid things. First, I would either be fearful, not entering really good trade setups, and then I'd be standing there on the sideline watching the market go up, not making any money, and kicking myself the whole time because I didn't enter that trade. The other thing that would happen is that I would, and this is actually probably the more damaging thing, I would build myself or create a case that I needed to be short, and I would get short the market way too soon and literally get run over by the bulls to the point that it just kept going and going and going. And I had no real good basis for being in the trade, but I wouldn't give it up because I would stubbornly watch that thinking I had to be right. The market was overdone. It's never been like this before. It's got to come down. And that is just not the case. It doesn't have to. So what's the solution to that? The solution to that is avoid listening to all of that noise. Shut off CNBC. Stop listening to all of those talking heads spinning and talking up their own portfolios. Focus on the price action. Analysts don't care about your money. Talking heads, commentators, stock gurus don't care about your money as much as you do. Focus on the price action and make your own decisions. Now, for those of you who don't watch this regularly or don't know, I use an indicator to help people see support, resistance, and trend. It's called Volatility Stop. I have an entire class on the Volatility Stop on the YouTube channel. If you take a look, here's a Volatility Stop. Volatility Stop, when it's green, is showing uptrend and showing buying going on. Notice there has been nothing in here all the way up since October suggesting that we are going to fall. When we fall, Volatility Stop turns red. Okay? And it's going to turn red. Well, that's the settings I have. It's going to show you downtrend. Okay? But this is a daily chart, and that daily chart is showing us absolutely no clue of a turn. If we take a look at this chart on a weekly, look at the strength of this move. And it's been going on for a long time. Okay? And it can continue going on for much longer as long as there's more buyers than sellers. You know, the question gets asked of me a lot. How can this keep going up? How can the market keep doing this? Simple. There's more buyers than sellers. So stay on the side of the trend. Don't get caught up in that overbought, oversold baloney. Look at the price action of the chart and follow that chart. Now, I'm not suggesting you chase a trade, and you guys know that. I've never suggested you chase a trade. But keep focused on the chart and don't get caught up in that whole overbought thing. This can continue to go up, and it's proving that every single day. Now, this morning futures are pointing to a gap up open, and they're getting stronger as the morning goes on, as those earnings come in. Right now, Dow is looking at about a 90-point gap up potential as I record this, and there's more news to come as the morning goes on. So right now, very, very bullish right out of the gate this morning. Now, that doesn't mean we couldn't whipsaw or turn back lower, but right now we're very bullish. Later on this morning, after the market opens on the economic calendar, we have three reports that are really quite important. The PMI flash, that's expecting an increase. So, you know, there's nothing bad in these reports right now. But you've got PMI flashing composite out there, and they're showing services, the composite number, you know, everything showing strength and going up. Existing home sales are also expected to remain very, very strong, and they're so strong that actually standing supply of homes out there has been dropping. So we've got a lot of buying going on in the housing market. And right here, the petroleum status report, the thing that's been helping us, you know, all these oil prices move higher, is because the status report has been showing a decline in supplies and has been trending lower, which, you know, is not uncommon in winter. As you know, we get a cold winter, demand for heating oils and things increase, and those supplies will normally decline during that period of time. And that's what's going on. And if you take a look at current oil prices, it would kind of suggest investors are expecting that's going to continue today, as oil prices are reaching 3-year highs today. On the economic or earnings calendar, we have over 100 companies reporting earnings today as we ramp up into this earnings season. Lots and lots of companies reporting. Please, folks, make sure you're checking against each stock that you trade or any stock that you're thinking of buying. Be very focused in when you're doing your preparation on those earnings reports. There's really no excuse to get caught by a report other than just plain laziness of not checking. Doesn't take long to do. Just find out when your company's going to report and have a plan. Be prepared to protect your capital. That's your job. You're the CEO of your trading business. Take that responsibility and do the job of checking those earnings reports and having a plan. Okay? Hey, with that, real quick, let's take a look at the VIX. The old VIX, you know, just not showing us any kind of stress or fear or anything going on here in the VIX. And I suspect with this pop-up this morning, we could even dip lower here on the VIX. So kind of keep an eye on it. Always keep in mind, whenever we're this high in the market, we're pushing up like this and gapping up toward market highs, that whipsaws are possible. And a whipsaw is nothing more than, you know, we get a strong move one direction, and then we suddenly intraday get a major shift back down, and then sometimes even the shift back up, and we can whip back and forth like that. And a really good example of that is here in the diamonds yesterday on a 15-minute. If we take a look right here around the open yesterday, we had that whipsaw price action going on here, popping up, whipping back down, whipping back up. So be careful of that. These things can happen and create really big swings around price tops. I mean, that's how tops get placed. You know, we get the bulls suddenly decide it's time to take profit, and we get those swift moves. So kind of keep an eye on that as you go forward and realize that that's possible. If we look at T2122, the 4-week new high, new low ratio on this line chart, you can see we're up here getting very, very close into that bearish reversal zone. And popping up this morning is only going to push us higher in that. Now, that doesn't necessarily mean we're going to immediately reverse and head down. It does not mean that at all. We can stay up here for a while. But it does mean it's wise to be paying attention. It's wise to be looking at your current profits and maybe scaling out some of those profits, or protecting your capital by tightening up some stop losses in your current positions. So kind of keep an eye on that. Hey folks, with that, I want to say thank you for everyone who watched these videos. I really do appreciate it. Thank you for clicking those thumbs up buttons and subscribing on YouTube and following me on Facebook. You guys are the best. I really do appreciate it. Feel free to share this video with any of your friends and family that you might find that you might think would find it useful. Everyone take care. I want to wish you an awesome, awesome day. And I will talk to you all very, very soon, bright and early tomorrow morning. Take care, everyone.